In Trading 101, you've already gone through, hopefully, the Forex Focus video, the Pyramid of Success, where I mentioned technical and fundamental acts as one, money management and risk reward acts as one, and then you get the mistakes and traps with the trading psychology acting as one. So money management was the prior video. Now this is risk reward. Risk reward overall is a extremely important component in the market, and people often get mixed up with risk reward. So for instance, let's say you can't really analyze the market properly. You're working on lower time frames. You're just looking for an entry signal to get in the market. Okay, you say to yourself, "Oh, I'm gonna go short Euro USD, and I fancy using 25 pip stop loss." I know a little bit about risk reward, so just to make it a one-to-one risk reward, I'm going to go for 25 pips, 25 pip stop loss, 25 pip target. Or you know what? I've heard that a 1-to-2 risk reward or a 1-to-3 risk reward is much more beneficial, so I might use a 50 pip target or a 75 pip target. I haven't really looked at the bigger time frames. I don't really know how to analyze the market as such. However, I've heard risk reward is an important component, so this is how I'm going to do it. Now, traders, I've seen so many examples of this, more or less on social media. I've seen screenshots of people using backwards risk reward, using 100 pips stop loss, going for a 20 pips target, because they believe, if I place this trade now, I give it some room to breathe, whether it be 50 pips or 100 pips. Sooner or later, it might, dip into a 20 or 25 pip profit, and that's when I'm going to snatch it and run. Believe me, it's all a mess. It's all a mess. So what we want to do, we want to use risk reward and use our risk reward tool on our professional charts, with our professional mindset, with our professional money management, and our professional technical analysis. So what I'm going to firstly do, I'm going to show you the risk reward tool on here once more, and then I'm just going to play around on the whiteboard, and I'm going to just share some experiences with you as to how to actually implement risk reward. So guys, I can't do too much on this video apart from explaining the concepts. A lot of the risk reward factors and actually applying risk reward hand in hand with other pieces of technical analysis, top-down analysis, and so on, will come later on in the course. So this is just like a warm-up. Also, I probably will pull up some of the charts actually, because I do have some live trades running, which I've actually used at the end of this course on the live trade examples. And I'll just show you them as well. All right, so firstly, we have the Euro USD daily time frame in front of us right now. I'm not going to go into the dynamics and the technicals behind all of it and so on, but we're currently trading Friday close at 1.1157. Okay, remember what I said about just getting rid of that fifth decimal? We can maybe see some structure here. Lower low, lower high point, little mini double top there as well. I remember this was a prior day's high. Market came back up, spiked straight through it, and so on. So overall, we've got lower lows. We've got this structure which is telling us that there is a potential for Euro USD to come a little bit lower. Anyway, right, so I'm just going to put a few lines on here. Now, I'm just going to use the horizontal ray. So let's say we got some support down here. We have some resistance up here. We might have another resistance level over here. We might have another support level down here. So a couple of levels on there. Now you can only really apply risk reward if you know how to analyze the market and you know where the potential is, for a currency pair to run to. So in Euro USD right now, just by placing this level of support, I'm around here at 1.09. Let's just say 1.0950s. Nice level as well. And what I said about but I haven't got into that yet. Actually, sorry. The next section is going to be price action, and then the section after that is key levels, and that's when we're going to be going into the dynamics, and you're going to learn a lot about the way key levels are placed onto a chart and so forth. But anyway, 50 levels, so 1.0950 and 00s are hugely important levels when it comes to these barriers, because that's all they are: support and resistance. So we've got support, resistance, resistance. Now anyway, let's say I'm not going to go into a full-on breakdown of this, but let's say we wanted to just sell the Euro USD. We wanted to sell it right here because that's where it's trading. So on this particular candlestick, if we zoom in, on Friday, we opened at the low of this red shooting star candle here. We spiked down a little bit. We spiked all the way up. So that's where these highs are coming from. And then we managed to actually get forced back down, which I'll show you on another chart in a minute, and actually close probably around 30%, maybe even 25% of the overall up move. That to me says there's something going on around here, which you can only really tell on a smaller time frame, and there's a potential rollover about to occur. There's weakness. So our risk reward tool, if I can just nudge this chart over a little bit, the risk reward tool is over here. Okay, so we have long and we have short. Long is obviously buy, short is a sell. So short sell, long is buy. Buy long, sell short. So in this case, we're looking to sell the euro against the US dollar. So I'm going to click short position. Now with the risk reward tool on TradingView, you click it and then you can click anywhere really. And it comes up really, really wide and really, really fat. So again, to keep everything neat, organized, that's what everything is about throughout this course is neatness, organization, and clarity. We want to just pull this a little thinner. Some people like it like this, which is cool. Some people like it like that. Me personally, I like mine like something like that. All right. Now this tool, to drag it around, we must click central. Okay, like this. And then once you've narrowed it down and you're happy with that, and you've got your trade set up wherever it may be, you grab it, you hold on to it, and you drag it around. So what you need to do, if you can see where the little balls are here, where the green meets the red, that's center point. That's basically where you need to line up your trade. So as you can see, the crosshair's helping me here. So let's say I just sold right there on the close of this candlestick. So that's where my entry is. All right. Now, once you've fixed the entry into place, that's the first thing we need to do. We now need to play around with the stop loss size, and we can extend the target and so on, like this. Now, our stop loss in this case, by the rules, let's say 20 pips above this spike. So the high of the spike, if you look at the right axis, it's 1.1220. Our stop loss wants to be 1.1240. So what we want to do, we want to grab the risk reward tool. You're going to learn about stop loss placement and all of this later on, guys, don't worry. I'm going to drag it to 1.1240, which is more or less here. You can line it up and you can see on the right axis 1.1240. It's right now. I'll get into these figures in a moment. Okay, so I follow the rules then, and as you can see, it's just above my daily resistance as well. If I can just configure that right to the peak of that candle, I'm a bit of a perfectionist on the charts. So yeah, above the daily resistance. If we're looking to this maybe to roll back over to the downside, if we do have bearish pressure overall on the Euro USD, I could say, all right, I want my target to land just maybe, again, see here, I want it right on the base of the candlestick wick. Right there. I want my target to be more or less here. All right, so I've lined it up with my entry first. First of all, I've narrowed it. I've lined it with my entry first. I've adjusted my stop loss, and I've used the crosshair. Always use the crosshair. The crosshair is the cross, which you can see, which is mapping out the X and Y axis on the chart. And I've dragged my stop loss into place, and I've dragged my target into place. Now, key elements here are, when it says stop, it says 837. Okay, that is not 837 pips. If we do the maths, if we look at the crosshair from 1.1156 to 1.1240, how many pips is that? 83. 83 pips. I've tried to modify the settings on the risk reward tool. You can go into format and play around with it. You can change the colors and stuff as well. So stop color, you can go ahead, and if you really wanted to, you could have it orange, black, red, whatever it's called. Text, you can play around with the text as well. You can have it black, you can have it white. All right. Coordinates, you can't really go ahead and change the way it's actually formatted on here. So that is 83.7. So 83.7 pip stop loss. Now target, this is not 2038, it's 203, 203, so 203.8 pips. So in this example, okay, we have an 83 pips stop loss, 83 SL, and our target is 203 TP. SL, stop loss, TP, target price zone or target point, PT, profit taking target, whatever you want to call it. And our risk reward ratio here is 1 to 2.4, sorry. So 2.43, I don't know why it does that. So we have 2.43. That is not a 2 to 4.3 or 2 to 4.3 or whatever. This tool, it does not show you the initial one. So it is 1 to 2.4. I tend to ignore that. Okay, so 1 to 2.4. I like to again round it. You can go into the specifics if you want, but 1 to 2.4 or 1 to 2.5 is great. But that is how it is formatted on the charts and on the risk reward tool. So just to aid confusion, I'm just showing you the risk reward tool on TradingView, and I'm going through how it works. So we don't think, okay, my stop loss is 837 pips, because why is this important? Because if you make a mistake in this, and you can obviously, as you get used to the quotes, you're going to obviously be tell by eye anyway. But if you put down, okay, my stop loss is 837 pips away, and you do your money management calculation, and my target's 2,038 pips, yeah, it's going to be a little bit, it's going to go a little bit wrong. So 83.7 pips, 203 pip target. That is a 1 to 2.4 risk reward. So you are risking 83 pips to gain 203. 1 to 2.4, 1 to 2.5. That for me is a brilliant trade. Okay, excellent trade setup. So I hope that helps in modifying. Now, quickly while I'm here, I'll just do an example of a long. I'm not going to pull up a chart or anything like that, but when you click long, it's going to give you the opposite direction. So again, you line it up, you extend your target to the upside, because obviously you're expecting the market to rise, and then your stop loss goes below. Okay, simple as that. So I'm going to be going into this with all of the trade setups. Actually, every single trade you do, you're going to throw the risk reward tool on there, and you're going to calculate it like a professional. Next, I'm just going to go over to a chart. Right, so this is one of the trade examples. This is the before shot. I'm not sure how this is going to go. However, I've broken this trade setup down, and the confluences and the reasons why I entered this trade at the end. It's more or less at the last section. Okay, so anyway, I spotted a reversal after this red candlestick here, after spiking through one of my prior daily high levels, and this was jolted from the news. So I've waited for the news to come out, the US data. Now this is the euro against the dollar. The US data came out negative. The euro and pound and gold and even Aussie, they all spiked up. So they all gained strength, and they popped up around 50 to 70 pips. It spiked straight through the prior daily high. That's what this zone is here. I've just marked it on with a rectangle. That's more or less enticed people to go long, and then the next candlestick has whipped it straight back down. 1 and 2, them two candlesticks, and that's known as a bearish engulfing formation, which you'll learn. It's in the book, and you'll also, I'll be running over this later on as well in the next section. Right, so here, okay, so what I've done, after that candle's closed, now this is a 4-hour time frame, so I was patient with this one. I waited for the 4-hour time frame to close. I put my risk reward tool on there, so you can see I've lined it up perfectly with the close of the bearish bar. Now this one, I've gave it a little bit of breathing room, so if I just nudge this over, if you can look at the right axis, it's 1.1220, say, and my stop loss is 1.1240. So I've used a 20 pip stop above the high. It's obviously not 20 pips from my entry, it's 20 pips above the high of this 2 candlestick formation in a safe spot. Again, it's just above the daily resistance too. All in all, it is 73 pips, not 736, it's 73 pips. Now with this one into next week, because the market's closed at the time of me doing this video, I'm expecting euro to come anywhere around here. We have a daily support level, we have another daily support level, and we have weekly support as well. So, I've just extended it so it is a risk reward of 1 to 2, not 2 to 1 or 2 to 0.1. It is a 1 to 2 risk reward. I am risking 73 pips to gain 148 pips, and hopefully this will come through next week. And again, the before and after of this trade in particular will come at the end of the online course, in the mix of all of the other before and after live trade setups. Okay, so I've just gone through the risk reward tool, how to apply it onto the chart, how to actually read it and not get confused. Some platforms offer this, some don't. If you are using TradingView as we recommend, you're going to have no issue. As I say, every single trade you do, you're going to put this risk reward on there. Now, just to clear everything up, it's in the book as well. A 1 to 1 risk reward is bare minimum. So let's say you're risking 100 pips for 100, or it could be you're risking 50 pips to gain 50 pips. That's bare minimum. If you stuck with a 1 to 1 risk reward, you would have to have a winning ratio of around 80 to 90%. Because if you think about it, okay, for every loss, you take 1 step back. For every win, you're taking 1 step forward. So in order to take more steps forward overall, you need to have a higher winning rate, a higher winning degree, okay? However, if you have even a 1 to 1.5 or a 1 to 2 risk reward, where you may be risking 100 pips for a gain of 200 pips, or you're risking 50 pips for a potential gain of 100 pips, this figure drops down. You could now be getting, let's say, 65 or even 70% of your trades, so 7 out of 10 trades out of 10, but still being a substantial amount of profit in terms of pips. This is why I'm trying to program you with pips percentage risk reward before we get into the money aspects of things. So yeah, for 1 loss, you take 1 step backwards. For a win, though, if you continue to use a 1 to 2 risk reward and the same contract size, the same pound per pip each trade, keep it uniform, you go boom, boom, straight into profit in 1 trade. So 1 step forward, 2 steps. 1 step back, 2 steps forward. Even better still, you could get a 1 to 3 risk reward, where you're now risking 100 pips for a potential gain of 300 pips, or 50 pips for a potential gain of 150. And 1 to 3 risk reward, you can drop this down, you can get half your trades correct and still be in profit overall in terms of pips. So you're taking 1 step back there. However, you could lose 3 trades in a row. 1 step back, 2 step back, 3 step back, and you could be down in the dumps. Okay, you've lost 3 trades in a row. You're still using the same contract size, the same pound per pip. You found a great trade setup where you may be risking whatever it is, but it's a 1 to 3 risk reward. That one trade, boom, straight back to break even. 1 more trade, boom, all the way over here. All right. So risk reward is very, very important, and that is how to apply it onto the chart. To apply in a trade setup, each trade setup is going to be different. It's going to be down to what strategy we're using, how far we think the market is going to run, because many people often try to get into the market, but here at Astra FX, we want to break the market down from top to bottom to see where it can actually go to. Why do we do that? This is the reason. So we can actually apply risk reward onto the trades. Quick one. Backwards risk reward is when we're like a 2 to 1. Okay, this means, okay, we're risking 200 pips on this trade, but my target's 100 pips. Sometimes you could get lucky doing that, by all means, but this is not what we want to see. Okay. Now then, people at the gambling machines, them slot machines, who stand there all day, the top prize is £25. All right, and they're pouring £5, £5, £5, £5, £10, all of that change is going in. They've just put £75 in the machine, and they finally get jackpot, but they're still down 50. Okay. Idiots. Anyway, that's risk reward in a nutshell. We're going to be moving on throughout our other videos, segments, topics, whatever you want to call them. I'm going to be applying risk reward in a professional manner. And also risk reward, this is all going to go on your spreadsheet as well. So this is what I'm saying about if you're new to charts and you just want to get the market direction right, you want to be putting the risk reward and you want to get into that routine of saving your work, coming back to it, see how it went before actually, putting your money on the line. So I hope that helps. That's risk reward.